Hey everyone, it's Christian, your Vancouver Realtor. And if you enjoy the short stories, the content of this video blog, subscribe. We love having you. Now, the topic for today's video is how to position yourself to get the bank's money. And the reason why this is very important is I see a lot of buyers and sellers trip up here and make mistakes with credit and what they're doing with their money, and they essentially handcuff themselves. So let's take those handcuffs off. Let's do things the right way, and I'm going to make a few suggestions here to help you out. Now, the very first thing to get money from the bank is you have to have credit. I recently was working with a client, and that was his issue. Now, has a very good job, works for a very big multinational firm. The trouble is he's new to the country and he has no credit history. So the bank doesn't want to go and give a $500,000 loan, right? So you got to make sure you get that credit. When you're young, start off with something like a $500 limit on your cards. As soon as you can, move that up to about $5,000. This shows the bank that you're responsible, that you'll pay back money you owe. And of course, that's when you can get a lot more from them in the form of a loan for a home. Okay, so make sure you have credit. The second thing you want to do is have a good credit rating or balance. And what you want to do is you always want to pay your bills. Pay your bills on time. It doesn't matter to the bank whether you're late on a $10 bill or you're late on $10,000. To them, it's the same thing. And that when late payments can stay on your record for 2, 3, 4 years, maybe more. You might want to check with a mortgage broker, but I know it'll hang around there for 3 years. Another thing on that is don't max out your total limit. So, for example, you see this sometimes. Someone has a $6,000 credit limit and they owe $5,950. So you've pretty much maxed out 99% of it. The tip I got from a mortgage broker was don't go past 70%. So that's a heads up. So for example, if you have a $5,000 limit, don't go past $3,500 on the card. All right? And remember that whether you're late with $1 or $10,000, it's the same to the bank. Okay? Thirdly, pay down your debt. And this is a point I really want you to underscore here. And this can be a killer. I've had a client in the past, great guy, had a job over at the airport, had actually a part-time job as well, was making $100,000 a year. And his only vice was the fact he really loved cars. So he went out and bought himself a BMW. So it sounds fine, right? Except he bought the BMW, and he through a loan. And so now he's making these monthly payments that are $600-700 a month. I don't remember the exact number. But what this did was it severely handcuffed him. Because when you go to apply to the bank, they're going to look at what you owe on your credit cards, what you owe on your car payments, and they're going to count that against you. So if you can take a loan of $2,500 a month, but you're paying $1,000 to these, your car and your credit cards, you can only get maybe $1,500 max, and you can't buy much with that because that you just can't get anything for such a small loan amount, right? So you really want to have as much room there for your loan servicing available, and you want it all to be towards a home. The key distinguishing fact here is this car. Now, he said to me he has a sweet spot, a weakness for wheels, and that sounds cute. But the trouble is this car not only cost him $80,000-90,000, a BMW. What he doesn't realize is this car is costing him $250,000. Because if he had bought the home first, right, the home goes up in value over 6-7 years. And this was a number of years ago. I'm sure he would have made $200,000 in his sleep just owning the home. And then he could have still gone out and bought the same car. So very important that you do things in the right order. Get a home first, then you can go out and get that nice car or sports car through loan, okay? And so let's move along. Fourth point here, and this is for self-employed people, and I was in discussions with a broker earlier this week, and he said the biggest mistake he sees from self-employed people is they underreport their income. And so they think they're a rock star because, they think, I've saved money. I'm not paying as much in my taxes. Fast forward 2, 3, 4 years, now they want to go and buy a home. The previous taxes show that they've only been, making $60,000 to $80,000 a year. Guy says, no, I make $150,000. Well, that's not what the taxes show. So too bad, you're out of luck, right? There's no going back. So I've always made it a habit, and I do work for myself as a realtor. I report everything I own, as everything I earn, because I know that maybe 5 or 10 years from now, I want another loan from the bank. So position yourself, be smart about that, so that you can get that loan down the road. Just report all your income. Plus, I think there's another factor here, and that's just that you feel good about yourself. You sleep at night with a clean conscience, knowing, hey, I pay my taxes, and you should always have pride in paying all your taxes and doing it the right way. Okay, couple other things this broker mentioned to me about self-employed people. One was that they just don't pay their taxes on time, right? And so now, they're looking to pay, looking to get a loan from the bank, but they still have a hefty tax bill. When you work for yourself, obviously, your taxes are structured a little bit differently. You may be paying them quarterly. That's our case as well. So you really have to budget yourself carefully, kind of like a business, right? Where you always have enough money in your accounts to pay your taxes, so that you are, that you're on the level, and that you can then pull the trigger on a home when you and maybe your partner want to do that, or just yourself. Okay, that was the sort of the meat and potatoes of what this broker was telling me. One other thing he mentioned here was just try not to get too fancy, too cute with deducting too much money in your personal business. It can cause a lot of headaches, and basically the broker has to reach back out to your accountant, get all the right paperwork. That seems to be an issue that a lot of are finding with self-employed people, just trying to want to save a little too much on their taxes sometimes. So just report all your income, pay all your taxes, and you'll be fine. Now, next point, down payment. This is more you want to have your down payment ready. This is another one that I've had to work with buyers. It's probably the biggest thing I see as a realtor working with buyers is they just don't have the funds for a down payment. So let's say you're buying an $800,000 property. You probably want to put down 20%, so that's $160,000. So you want to have that money in Canada in your bank account. If it's coming from outside the country, depending on the country, it usually has to be in Canada for 3 months, 90 days. If it's coming from inside the country or from the US, it usually has to be in your account for 30 days. That's how the banks like to do it. A couple of points there. You can get money from your family. It has to be accompanied by a gift letter, because the bank's going to ask questions. Hey, where's this money coming from? Where are you getting $100,000? Right? They're very careful with these things, and they will want to verify, every last dollar that you are reporting as your down payment. Okay, so just that's something to keep in mind. I think this is the biggest hurdle, the biggest bar to jump for people is getting that down payment together. You can do it through your own savings. I find that 9 out of 10 of my clients in the Vancouver area, that includes Burnaby or buying a home in Coquitlam, 9 out of 10 people are getting help from family, because in Vancouver, the bar to entry is just so high. And so it's okay to go and ask family. I find family is very supportive of their kids, obviously, and they want to see you get a foothold in the real estate market and get your own home and get life started, okay? All right, and the final point I want to focus on here is for sellers. And this is for sellers who want to sell and then buy a property. And what I see here sometimes is the sellers don't have the money ready for a deposit on the place they want to buy. I'll give you an example. Working with a client right now, and she wants to sell her place, a condo, and then move into a townhouse. Now, you still have to have about 5% at least ready for the townhouse. So let's say you're buying a $1 million townhouse, you have to have $50,000 ready for a deposit. So if you're upsizing, right? And what a lot of people do is they think that they can sell their place and they'll have that money, but it doesn't work that way. Even when you're selling your place. And by the way, you always sell first and buy second. And you do that for two reasons. One, you know what budget you're working with. And two, you don't want to be left carrying two mortgages, right? That's not going to be fun. So you sell first, buy second. But in this window of time, once you have an accepted offer and sold your place, now we're on the hunt. We're looking for that home for you to move into next. You haven't gotten any money yet from the guy who's buying your place. So that's why you have to have some money available for the 5% deposit on the home you're buying. Okay, so it's 5% is going to be the minimum that you need to have ready. So it's pretty simple to do the math on that. You just have to think about what you're buying. If you're buying a $1.2 million half duplex in the Vancouver area, well, that'll be $60,000, right? Plus, you've got your inspection and a few other fees there. So it's always good to leave about $4,000 to $5,000 on top of that. Okay. All right, so we hope this has been of value to you. There's a lot more to it, obviously, than that. We're trying to distill this and make it as simple and easy and bite-sized chunks of intel for you. But for further regarding your situation, feel free to reach out to us. Happy to help. And we'll see you next time.